if everything is becoming tokenized in sense of machine-readable information packets, right? For us to get from AGI to ASI, we're going to need to tokenize all the information. Every single thing out of every university, every household, every single thing you can think of, every scientist, every single thing needs to be digested. I think this is much larger. If we talk about TAM, it increases the size of financial markets a million X.
Washington may be closer than ever to delivering the first real regulatory framework for crypto in United States history. The Senate Banking Committee has now officially scheduled the Clarity Act markup hearing for May 14 at 10:30 a.m., setting up what many inside the industry are calling a true make-or-break moment for digital assets in America. For years, crypto firms have operated under what critics describe as regulation by enforcement, with the SEC and CFTC battling over jurisdiction while companies faced lawsuits, uncertainty, and constant threats of moving offshore. But now, lawmakers appear ready to finally draw a line between the two agencies and establish clear market structure rules for the entire industry. And the timing could not be bigger. Because while regulators debate the rules of the next financial system, some of the largest institutions and sovereign powers in the world are already positioning aggressively for what comes next. In today's video, we'll break down why recent moves from BlackRock and even Japan may signal that tokenization is rapidly becoming one of the most important trends in global finance. We'll also hear from Raoul Pal and Yoni Assia on why crypto rails, AI agents, and tokenized markets could eventually expand the size of financial markets beyond anything humanity has seen before. If you enjoy high-level macro and crypto breakdowns like this, make sure to like the video, subscribe to the channel, and turn on post notifications so you never miss the next major shift happening across the digital asset industry. Thanks, and enjoy the video. This week, BlackRock took another major step deeper into the tokenized economy after filing paperwork to launch tokenized money market funds directly on the Ethereum blockchain. The new digital share class is tied to BlackRock's roughly $6.1 billion treasury-based liquidity fund, which invests primarily in cash, treasury bills, and short-duration government securities. But the bigger story here is not just the fund itself, it's who the product is designed for. According to the filing, these tokenized shares are aimed at investors already holding large amounts of capital inside stablecoins rather than traditional bank accounts. That is a massive signal that the world's largest asset manager now sees the stablecoin economy as a permanent part of the future financial system, not a temporary crypto experiment. And this is happening at the exact same time governments themselves are beginning to move on-chain. In another major development, Japan announced plans to tokenize government bonds on blockchain infrastructure, bringing one of the largest sovereign debt markets in the world into the tokenization era. This is not a small pilot program or a contained sandbox test. Japan's government bond market represents roughly $10 trillion in outstanding debt. For years, critics argued blockchain had no meaningful real-world use case beyond speculation. But now, sovereign debt markets, money market funds, and treasury products are increasingly moving on to the exact same rails crypto networks were originally built for. What makes all of this so important is the speed at which institutional adoption now appears to be accelerating. Just a few years ago, most major financial firms publicly dismissed crypto as unstable, speculative, or irrelevant. Today, many of those same firms are building tokenized products, expanding stablecoin infrastructure, exploring blockchain settlement systems, and positioning themselves for a future where markets operate globally, instantly, and around the clock. The conversation has quietly evolved from will blockchain survive to who controls the infrastructure layer of the next financial system. Here's Raoul Pal and eToro founder Yoni Assia explaining why tokenization may ultimately become the foundation for the next phase of global intelligence, finance, and capital formation. Buy $10,000 of Bitcoin on a regular exchange. It grows to $60,000. That $50,000 profit? You could owe $10,000 or more in capital gains tax. Now do the same trade inside a Roth IRA with iTrustCapital. That growth? Tax-free. You keep the full $50,000. Same crypto. Completely different outcome. iTrustCapital lets you hold crypto in a self-directed IRA, trade 24/7, and secure your assets with institutional-grade custody. You can also hold gold, silver, and stake certain assets. Real U.S. customer support. $100 bonus when you fund through the link below. In crypto, structure beats timing. Every time.
What we've just done is we've just changed the TAM of financial markets, particularly after they go on to crypto rails, because then they become 24 hours a day and all of that stuff. But we've changed the TAM from humanity, 8.5 billion people, whatever the number is, to infinite. Because as soon as agents become autonomous, they will have their own transactions, will have their own profit motives, they'll be running their own treasuries, they'll be using DeFi. All of this stuff suddenly compounds at the same speed intelligence. People don't get this yet. They kind of think, well, it's like getting a robot out of a factory. It is not, because it's going to be Reed's Law all over again. We get to that point where the entire economic system is about to break down. I've called it the economic singularity, and I get to about 2030. And at which case, if GDP used to be population growth plus productivity growth and debt growth, population growth just goes vertical. The population can grow 50% in a year because you're using AI and robots as population now. Productivity.
Okay. I was like, what data are you reading when you're talking about population growth?
Yeah, because
I get
we
it.
think of
humans. They're now part of the population. Yeah,
because in GDP, it's productive units of intelligence, and that can be machine or human.
That's actually super interesting and makes a lot of sense.
So what you get then is weird things like GDP can go up 30% in a year, in a month. We don't even know what this means. It breaks the whole economic formula down because the economy now runs at machine speed and not at biological speed, which is how we've always dealt with things. We have no infrastructure to deal with it. But sooner or later, everyone's got to realize that this is the biggest discovery of all of humanity and the last one we'll ever make, because AI will do the rest. And it kind of sucks in all capital. And I just don't think this is over until it sucks in all capital. But then we get to that economic singularity point, and I'm not sure what markets look like, because humans aren't participants. There's no point, because you've already outlined that. So the AI agents are better. Now, the AI agents also understand, because they're smarter than Yoni, that, we create boom bust. So you'll have boom bust agents, anti-boom bust agents. You'll have all of these different economic
By the way, very interestingly, I don't know how much you follow, what are those 40,000 tokens issued in Solana every day?
No idea.
Which is like a number that you just think of that number, and then somebody in traditional finance would say, what is that? What's happening here? And it's actually exactly what you just said. It's sort of a boom and bust game where AI mostly and people with AI are looking at creating a token to find that other AIs or people will look at that token to buy it. It's like micro pump and dumps that happen.
Wow.
Out of those 40,000, I think the number is about only 400 survive more than 24 hours.
But there's obviously an economic incentive still with that.
There's an economic incentive, and all of it by definition is run by AI because it's like MEV, right? So it's MEV. It's like AI that is looking at the blockchain, trying to figure out what's happening in the next block. Humans, nobody can make those decisions other than AI, and it's people who are running these game theory, we'll call them, instead of games, so it sounds better. But game theory experiments in like how markets operate in micro scale, and they've been doing it. They've been doing it at the rate of 40,000 tokens a day, right?
I didn't realize that. I mean, that's extraordinary. The one that really grabbed my attention, I don't know if you've seen the documentary somebody's just made on it, but it was the Terminal of Truths and the infinite backrooms.
No.
So there's a guy who's been on Real Vision, Andy Ailey, and he got 2 instances of Claude in a room and just left them without any human intervention. And they're kind of insane. They're sort of alive. And what happens is they build this whole religion around this thing called Goatsy, which was an internet meme. And He gives it a Twitter account. It starts posting
Oh,
about it.
I know the story. I know. I followed it on X.
But what happened was somebody, random, we don't even know who, launched that token goatsy because it was capturing attention, because that's all you need, right? You just need a bit of attention.
Yeah.
And that created $1.5 billion of value. Then the one came after it, Fartcoin, came out of the same thing. That was 3.5. So $5 billion of value came out of one AI. And it's just showing exactly what you're talking about here.
The biggest takeaway from this conversation is that tokenization is no longer being treated as a niche crypto narrative. According to Pal and Asia, what we're witnessing may actually be the early stages of a completely new financial architecture, where AI systems, autonomous agents, stablecoins, tokenized assets, and blockchain rails all begin interacting together inside one massive digital economy. That's why firms like BlackRock, JP Morgan Chase, and Morgan Stanley are moving so aggressively into this space. They are not positioning for a short-term meme cycle. They are positioning for a world where capital, assets, information, and even AI-driven economic activity increasingly move across programmable blockchain networks operating 24 hours a day. Let's get back to the video.
If everything is becoming tokenized in sense of machine-readable information packets, right? For us to get from AGI to ASI, we're going to need to tokenize all the information. Every single thing out of every university, every household, every single thing you can think of, every scientist, every single thing needs to be digested. And what that comes to me is the biggest marketplace of all time. Because we're not now just talking about market prices for businesses or economic activity. We're talking about the very thing that builds intelligence itself, which is more data. And this, I think, will be an invisible marketplace because no humans are going to be involved in this. It'll be agents grabbing information, models grabbing information, agents trading information, seeing where the patterns are on the information, and the information becomes the value substrate itself. I think this is much larger. If we talk about TAM, it increases the size of financial markets a million X.
So I'll be a bit old school here to say that first we have $400 trillion to tokenize of bonds, real estate,
Agreed.
private equity, private markets. Then we have rights, player rights, football games. Like, I think when you think of everything right now tradable first needs to be tokenized, that's already like a 400 trillion TAM.
See, I disagree.
Growing to a trillion TAM. I think that, by the way, these are like discussions that I'm having with developers right now about, do you still need to read code, right? So I wrote, 2.5 million lines of code in the past 2 months. Nobody can read my code. Nobody can read the amount of code that my AI agents built with other people. And we're having this discussion of like, we can't read the code. How do you know? How do we make sure it works? And there's only one possible answer to it. AI needs to read the code. AI needs to self-heal and monitor and QA and everything. And, eventually it reads and writes bytecode, right? So it doesn't matter if there's code in it in C# or Rust. It's ones and zeros for AI, right? So all of that ones and zeros, when you think of like tokenizing everything, what you're saying is every piece of valuable information, which is a string of one and zeros, eventually, gets tokenized, is very similar to how you fine-tune models.
It's exactly the same process.
It's exactly the same process. So I'm not sure whether
you see
you're saying it's something that's going to be invisible. I'm saying it's already happened. That's why people are consuming electricity and building those GPU farms, is because Google and Facebook and Oracle and X already realized what you're saying 3 to 5 years ago and started building exactly that. Those machines, that's what they're doing.
Yes, but they have walled garden data sets. And, the advertising market is a lot of this, all of that. what I'm thinking of is on a broader scale, and how I think about the world is the universe optimizes for intelligence per unit of energy. And capital will route to where that is more efficient. And I'm not sure that it's a US government bond market versus somebody tokenizing a data set. An agent says this is an amazing data set.
Right. I think that's one of the...
We can call OpenClaw the same thing, right? An open source system. Right, OpenClaw was the fastest scaling GitHub in all history.
It looks like it's not a hockey stick anymore. It's just like a pole. People are, it just looks like this. It's a pole.
And so we've never, ever in any history seen Reed's law happen. We've known about it, but it's not recordable in biology or anywhere. And it's happening fucking everywhere all at once. I don't know if you saw the ARC thing of number of words written each year by humanity versus number of words written each year by AI. In 2.5 years, it's overtaken humanity.
Right now, the market still feels caught between two realities. On one side, prices continue to move through periods of volatility, uncertainty, and hesitation. But underneath that surface noise, some of the largest financial institutions in the world are positioning aggressively for a future where blockchain infrastructure becomes deeply integrated into global finance. BlackRock is tokenizing money market funds. Japan is bringing sovereign debt on-chain. Major banks are expanding stablecoin and digital asset operations. And macro investors like Raoul Pal believe the scale of what's coming could eventually dwarf every previous crypto cycle combined. That's why many long-term investors believe this phase looks less like the peak of a cycle and more like the positioning stage before a much larger expansion in adoption, liquidity, and capital flows. The infrastructure is being built first. Regulation is slowly being negotiated into place. Institutions are accumulating exposure quietly while public attention still swings between fear and boredom. But if this tokenized economy does scale the way many of these firms expect, the next major phase of crypto could look dramatically bigger than anything the industry has experienced before. Let me know your thoughts in the comments below. Do you think tokenization really becomes the future of finance, or is the hype getting ahead of reality? And if you enjoyed this breakdown, make sure to like the video, subscribe to the channel, turn on post notifications, and thanks for watching.